Hello everyone, welcome to the market opening bell for Monday, June 15th, your 10-minute guide to the stock market. US-Iran talks are approaching a ceasefire memorandum, and the Hang Seng Index opened higher by 252 points last Friday before expanding its gains, rising as much as 522 points to a high of 24,771 points. It closed the day at 24,718 points, up 468 points or 1.9%, with total market turnover reaching 316.4 billion Hong Kong dollars. The Hang Seng Tech Index closed at 4,705 points, up 49 points or 1.1%, while the H-share index closed at 8,374 points, up 157 points or 1.9%. Southbound funds recorded a net outflow of 3.942 billion Hong Kong dollars from Hong Kong stocks, with notable net buying in Yangtze optical fiber and cable at 883 million, CNOOC at 609 million, Kingboard laminates at 526 million, Xiaomi at 387 million, PopMart at 319 million, Tencent at 315 million, Hong Semiconductor at 308 million and SMIC at 127 million. On the selling side, there was heavy net selling of the Tracker Fund at 3.896 billion and Alibaba at 1.287 billion. According to statistics, Southbound funds have net bought Tencent for 6 consecutive days, totaling 6.583 billion Hong Kong dollars. And net bought Kingboard laminates for 5 consecutive days, totaling 3.058 billion. They have also net sold Alibaba for 4 consecutive days, totaling 5.893 billion. Summing up the week, the Hang Seng Index fell around 190 points, or about 0.8% cumulatively, recovering most of its earlier losses. The H-shares index declined 0.7% for the week, while the tech index dropped 3.7%. Technically, the Hang Seng Index hit the low of 23,999 points last Thursday, with the 9-day relative strength index falling to the 27 level, indicating oversold conditions. It staged a strong rebound on Friday, reclaiming the 24,500 point level. This candlestick pattern of quickly recovering after briefly breaking a key support suggests strong buying interest below 24,000 points, and the rebound is expected to continue. The recent decline weighed from the May 14 high of 26,884 points to last Thursday's low of 23,999 points, total the drop of 2,885 points. A 38.2% rebound would target 25,101 points, potentially reclaiming the 10-day moving average at 24,988 points and filling the downward gap between 24,928 and 24,837 points from last Monday. The 25,000 point level is not only a round number psychological barrier, but also a plier-dense trading zone. For the Hang Seng Index to sustain its upward momentum, it needs to reclaim this level with a strong daily bullish candle, accompanied by heavy volume. A 50% rebound would target 25,441 points next. On the mainland, the 3 major A-share indexes opened higher by 0.8 to 2.9% last Friday before fluctuating upward, closing with gains of 0.5% to 1.1%. The Shanghai Composite reclaimed the 4,000 point mark, rising 44 points or 1.1% to close at 4,031 points, showing little net change for the week. The Shenzhen Component Index gained 111 points or 0.8% to 14,963 points, down about 2.3% for the week. The Chinex Index rose 19 points or 0.5% to 3,830 points, down about 3.2% weekly. Combined turnover in Shanghai and Shenzhen reached 3.22 trillion yuan. The renminbi central parity rate against the US dollar strengthened by 41 pips to 6.8109 per dollar. The latest May 2026 financial statistics released by the People's Bank of China showed characteristics of stabilizing total volume, optimizing structure, and continued deleveraging by residents. New yuan loans in the month total 520 billion yuan. This marked a seasonal rebound from April's rare contraction of 10 billion yuan, bringing the cumulative new yuan loans for the first 5 months to 9.11 trillion yuan, slightly above market expectations of 9.04 trillion yuan. However, May's new loan amount was still below expectations and 1,000 billion and 100 billion yuan lower than the 6,200 billion yuan recorded in the same period last year, reflecting persistently. The latest May 2026 financial statistics released by the People's Bank of China show characteristics of stabilizing total volume, optimizing structure, and continued deleveraging by residents. New yuan loans in the month total 520 billion yuan. This marked a seasonal rebound from April's rare contraction of 10 billion yuan, bringing the cumulative new yuan loans for the first 5 months to 9.11 trillion yuan, slightly above market expectations of 9.04 trillion yuan. However, May's new loan amount was still below expectations and 100 billion yuan lower than the 620 billion yuan recorded in the same period last year, reflecting persistently weak credit demand in the real economy. Household loans decreased by 631.4 billion yuan in May, with both short-term and medium to long-term loans showing weakness. This indicates that consumer confidence and home buying willingness remain subdued. Residents are accelerating mortgage repayments and reducing non-essential debt, leading to an overall net contraction in household credit. The cumulative social financing scale increment for January to May reached 17.48 trillion yuan, exceeding expectations of 17.15 trillion yuan. May's single-month social financing increment was about 2.03 trillion yuan, also above expectations, maintaining relatively loose overall financing conditions. Broad money supply M2 grew 8.6% year-on-year at the end of May, roughly in line with expectations and significantly higher than nominal GDP growth, showing ample liquidity in the financial system. Narrow money M1 rose 5.5% year-on-year, an improvement from prior levels, signaling gradually improving activity and liquidity among market entities. Cash in circulation M0 increased 11.9% year-on-year. The market will watch this week's Troika data, expecting China's May economy to show a pattern of weak recovery with severe structural deflation. Industrial production steadily rebounding on strong external demand, while domestic consumption and fixed asset investment remain sluggish. May's retail sales of consumer goods are forecast to decline 0.3% year-on-year after a 0.2% rise previously. Industrial added value for enterprises above designated size is expected to grow 4.3% year-on-year, up from 4.1%. Urban fixed asset investment for the first 5 months is projected to fall 2.3% year-on-year, compared to a 1.6% drop in the first 4 months. The surveyed urban unemployment rate for May is expected to remain at 5.2%. Last Friday afternoon, reports emerged that global banks were restricting leverage bets by hedge funds on Asian chip stocks, including SK Hynix, Samsung, and TSMC. The 2x leverage long Hynix ETF 7709 briefly surged 15% before closing up only 0.5%, while the 2x leverage long Samsung ETF 7747 narrowed its gain to 12.6%. Chip stocks turned lower, with SMIC down 2.25% and Montage Technology down 2.7%. Lenovo bucked the trend and fell 2.4%. ITC released first quarter 226 x86 server market data showing global x86 server vendor revenue at $63.9 billion US, down 2.9% year-on-year, with shipments at 3.162 million units, down 9.6%. Against a broadly pressured global market, Lenovo stood out. By revenue, Lenovo rose to second place globally, up one spot from the previous quarter, with revenue growing 36.5% year-on-year and 10.9% quarter-on-quarter, achieving an 8.8% market share, up 2.5 percentage points. In the competitive landscape, Dell remained first with 41.2% revenue growth and 12.2% share. Lenovo surpassed Supermicro, Inspur, and HPE to take second. Supermicro's revenue grew 16.9%, HPE 25.1%, while Inspur fell 6.9%. On shipments, Lenovo grew 21.2%, the highest among the top 5 global vendors, ranking third worldwide. Overseas markets drove Lenovo's growth this quarter, with overseas x86 server revenue surging 64.9% and shipments up 39.5%, both leading major international competitors. This performance aligns with Lenovo's recent earnings, where its ISG segment set a new revenue record in the fourth fiscal quarter, turned profitable, and achieved full-year break-even. AI server revenue grew 50% for the year, with over 140 billion yuan in order backlog. As demand for AI servers, liquid cooling, and enterprise computing continues to release, Lenovo's infrastructure business is transitioning from an investment phase to a growth realization phase, and its value in the AI infrastructure chain is expected to be reassessed by the market. The newly listed stock today, Liuliumei, stock code 6658, traded at 100 Hong Kong dollars in the grey market on Friday via Philip Mart, up 129.5% or $56.42 from its listing price. Excluding fees, each bought lot of 100 shares would yield a paper profit of 5,642 Hong Kong dollars. Reports indicate Iran has confirmed discussions on a peace treaty, with the US and Iran nearing a temporary agreement to reopen the Strait of Hormuz. The deal would extend the current ceasefire by about 2 months and initiate further talks on Iran's nuclear program. Oil prices fell and SpaceX listing boosted investor sentiment, driving U.S. stocks higher on Friday. The Dow closed at 51,202 points, up 0.7%. The S&P 500 rose 0.4% to 7,431 points, and the Nasdaq gained 0.3% to 25,888 points. The fear gauge VIX index dropped 1.76 points or 9.05% to 17.68 points. The Nasdaq China Golden Dragon Index, tracking Chinese stocks, rose 30 points or 0.5% to 6,326 points. Hong Kong ADR trading suggests the Hang Seng Index will open higher by 154 points today at 24,873 points. All three major U.S. indexes rose 0.7% for the week, reversing the previous week's declines. All sectors posted gains except healthcare, with materials leading the advances. SpaceX closed its first trading day 19% above its $135 issue price per share. Its market capitalization surpassed $2 trillion, entering the top 10 most valuable U.S. listed companies and exceeding that of Elon Musk's electric vehicle maker Tesla. SpaceX options contracts will begin trading on the CME and Nasdaq this Tuesday, with its substantial volatility expected to attract tens of billions in speculative capital, further increasing turbulence in the tech sector. Nvidia rose 0.16%. It reportedly informed Chinese clients that its Vera CPU for AI data centers could launch as early as August, allowing orders to begin. Sources say some Chinese clients have shown interest in Nvidia's first Vera CPU designed for agentic AI. Vera is already in full production, operating 1.8 times faster than competitors' similar processors. When Jensen Huang unveiled Vera in March, the company noted that leading cloud computing firms, including Alibaba and ByteDance, were collaborating with Nvidia to deploy it, though it was unclear whether actual ordering has started. Adobe shares fell 6.8%, the second largest decliner in the S&P 500. The company delivered solid results, but these were offset by the departure of the CFO and questions about growth prospects. On the economic data front, the University of Michigan Preliminary Consumer Confidence Index for June rose to 48.9 from 44.8 in May and beat expectations of 46, helped by lower gasoline prices. The survey showed one-year inflation expectations falling to 4.6% this month from 4.8%, with five-year expectations dropping from 3.9% to 3.4%. The World Bank lowered its global economic growth forecast for this year by 0.1 percentage point to 2.5% to account for the impact of the Middle East conflict. If energy supply disruptions worsen and exert significant pressure on financial markets, growth could slow to just 1.3%. Due to the war, the World Bank cut growth forecasts for two-thirds of countries, with the largest impacts on the UAE, Iraq, and other Middle Eastern nations. It expects China's economic growth to slow to 4.2% this year, down 0.2 percentage point, while U.S. growth holds at 2.2%. Eurozone and Japan growth forecasts were trimmed by 0.1 percentage point each to 0.8% and 0.7% respectively. Our stock pick today is ChowTaiFook, stock code 1929. ChowTaiFook announced its fiscal year results for the period ended March 31st to 26, demonstrating significant success in its brand transformation and delivering high-quality profit growth. During the year, turnover increased 5.3% year-on-year to 94.398 billion Hong Kong dollars, while profit attributable to shareholders rose 52.2% to a record $9.004 billion. Gross margin improved to 32.3%, supported by surging gold prices and higher sales contribution from uniquely designed high-margin flagship product series. Coupled with effective cost control, operating profit grew 27.8% year-on-year to $18.85 billion, pushing the operating profit margin up 360 basis points to a five-year high of 20%. The group's return on equity rose to 28.4%, continuing to improve from the historical five-year average of 20.5%. The board recommended a final dividend of $0.45 per share, bringing the full-year dividend to $0.67 per share. The full-year payout ratio for fiscal 2026 was approximately 73.4%. The group is expanding its business around three core growth drivers, namely reshaping the global position of Chinese luxury brands, strengthening the product portfolio and operational efficiency, and exploring new business areas. In terms of reshaping the global position of Chinese luxury brands, the Signature Collection, ChowTaiFook Heritage Collection, and Palace Museum series maintained strong sales momentum in fiscal 2026. This drove a 16.9% year-on-year increase in retail value of prized jewelry in mainland China, lifting the mainland's share of total retail value from 30.6% last year to 35.4%. which provided support for overall gross margin. Regarding strengthening the product portfolio and operational efficiency, the group's store optimization strategy focuses on securing premium locations and developing high-quality outlets while enhancing customer experience and maximizing productivity and operational effectiveness per retail space. As of the end of fiscal 2026, the group had opened 8 new design high-end stores in prime locations in mainland China. These stores deliver significantly higher productivity, approximately 8 to 10 times the average same-store sales. The target is to increase this to 50 stores by fiscal 2030. In exploring new areas, ChowTaiFook launched a brand new business line called ChowTaiFook Home, becoming the first Chinese jeweler to enter the luxury home furnishings sector. This lifestyle product portfolio aims to tap into diversified market segments, expand the customer base, attract and engage new clientele, and generate strong synergies with the core jewelry business. On international market expansion, the group aims to double the retail value of its international business compared with fiscal 2026 and expand its international store network to over 100 outlets. Suggested entry price $12.20, first target $30.20, followed by $13.70, stop loss $11.60. I do not hold the above stock.